What's up, everyone? Today we're going to get a little bit more controversial before flipping back to education stuff later. But today we're going to talk about AMC and GameStop, why they mooned, and if what happened was really good for the overall market from the perspective of a day trader. That's a key here. I'm not talking about this from the perspective of holding GameStop or AMC long term. I'm talking short term trading GameStop, day trading, or short swing trade, 1 to 3 days or less than a day from that perspective. Before I get into whether it was good or not for the market, in my opinion on that, I think it's important to understand why this even happened. The first thing we really need to look at is, first off, stimulus checks. Our first stimulus check hit March 27th was the first day. If we see here on the weekly on SPY, this is the week of March 23rd is where we first hit bottom and rocket super hard. Ever since then, we have been in a very strong uptrend. It doesn't take a lot to see this finally broke out up here, but we are in this very strong, bold trend. So overall market trend in the long term is up. Our second stimulus check hits right here on January 15th. And this is actually where AMC and GameStop absolutely moon. These stimulus checks also brought in a bunch of new people to the market because simply FOMO. You're seeing online, on Twitter, everywhere. This is also pump and dump era at its peak. But you're seeing everywhere that people are making life-changing amounts of money in 20, 30 minutes just because of one ticker. They want to hop in. They want to make this money, increasing that FOMO. Now, for when AMC and GameStop actually moon, gonna look here. We got all three charts. We got SPY, GameStop, and then AMC, of course, over here. So this, as we can see, January 18th was our first hop here on AMC. And then if we look up here, January 18th, okay week, not a very big move. But when this big move occurs on AMC and GameStop, it's actually the week of January 25th. The overall market SPY here is down. This is a bearish candle. In doing that, it brings in breakout traders who are looking to trade that upside because, simply there's not as many tickers going up. That brings even more money, even more people trading into AMC, into GameStop. We see here GameStop absolutely rips and then rips face January 25th, January 25th, January 25th. AMC and GameStop became meme stocks. They ran together. And the risk to reward's great. Even if there is no short covering that, eventually does occur, the risk to reward on AMC is it's amazing. Same with GameStop. As low as either of these can go is $0, right? $0. Okay, cool. Both of these, at its lowest here, GameStop's $1, if that. AMC as well, 50 cents. So, this is bringing in people who can trade both shares and options and make a good contribution to the amount of overall shares they have. Going back to that stimulus point, when those second stimulus checks came out, it again brought in more people to the market because they've already been dealing with COVID for about almost a year now. So 6 months, you have 6 months to prepare a little bit of money, and we're kind of getting used to COVID, how this ecosystem is working, how things are working in COVID. So those second stimulus checks, they bring even more money to the market. More people are hopping into the market because simply you can work from home, and it's a lot easier just to do that as opposed to, go to work where you have to wear a mask or most offices are probably closed. Remote work also giving employees a lot more time on their computer, a lot more free time to do, what they want. A lot of people took up the stock market in this time. And the last reason, of course, would be a short squeeze or shorts covering, which is that third component of how we could even just continuously go up for 3 straight weeks here on AMC, 3 straight weeks, absolutely massive on GameStop. Shorts had to cover their position, right, if they wanted to make any money or really save that money in this case. Because of that, you have new people coming into the market looking to trade and hearing about AMC GameStop from that FOMO factor on Twitter, which was huge at the time. You also have those institutions trying to cover their shorts. All the shorts are trying to cover, which gives you that basis for a short squeeze. And thirdly, we're down on the week on SPY when both these go crazy. So those breakout traders, they're hopping in there fast. And it's those names that pop up on the scanners that are, they're up a certain amount of percent, whatever those scans might be. So that brings in all eyes are on these names. Not only that, but they're also breaking media headlines. They're breaking news. It's like, what's happening? AMC, GameStop, two bankrupt companies going absolutely insane, and people making life-changing amounts of money on these tickers. Now, for the reason why I think AMC and GameStop is the worst possible thing that could have happened from a day trading perspective. And the big reason here would be it's all psychological, right? People came into this market and did probably make a good amount of money, but then they thought they could keep doing this and change their lives, and they absolutely learned nothing about day trading, nothing about what it takes to build consistency and actually make money doing this, because you can make money day trading, you can make money trading, but this scenario, GameStop, AMC, are not normal scenarios. This is not something that happens daily, weekly, monthly, yearly, century. It doesn't happen every time in a century. And because of this, that greed factor comes in. Everyone's expecting these absolutely massive moves, and pump and dumpers come in. People who think they know what they're doing, they see this stuff on the internet and they start tweeting stuff out. We're in a bull market. Yeah, but pumping up work then. All you got to do really is buy calls on any name, and it would have gone up at some point, and you probably would have thought, oh yeah, I can build my following. You see all these big names on Twitter that have, hundreds of thousands of followers, and it's solely from pumping and dumping. When the market got bad, those people, no one, likes them anymore because they don't know how to trade, and they're just bagging the shit out of all their followers. And it's awful for everyone. And a big reason why that even happened is simply because of what happened here, with SPY, that super quick bounce in a bull market, but also GameStop and AMC brought in all these pumpers and dumpers and just honestly fucked over Twitter from a FinTwit perspective. And lastly, one of the bigger reasons is the feeling of these gains or this type of movement is normal in the stock market. Right now, we are in more of a normal stock market type. As we could see, before all this wild shit happens, these ranges aren't crazy. It's like for several months, it's stuck between 268 and 286. Finally, we get some drop down and a bounce back up. But even then, we're going from the low in December of 233 to a high in February of the next year at 339. So 100 points in a year. That's nothing too crazy, but that's a normal market move. This is not anyway normal. This is multiple years, of course, and it's an absolutely massive breakout, but this is not normal. And that's why, from a day trading perspective, I think the worst possible thing that could have happened was AMC and GameStop bringing all these people in. And honestly, I think it messed up a lot of people's perspective on day trading and how hard it actually is and what it takes to actually be profitable in day trading or as a trader.